Most people think building wealth requires a huge salary, perfect timing, or getting lucky with the perfect investment. But the truth is, wealth is usually built in a much more boring way. A guy named Jake figured this out at 34 years old. He works a normal office job. Nothing flashy. No luxury lifestyle. No crypto gambling. No get-rich-quick nonsense. A few years ago, Jake started investing just $50 every single week into Dividend stocks. That's it. And before you think, that amount is too small to matter, listen carefully. If Jake continues this strategy consistently for the next 30 years, his portfolio could eventually pay him over $5,000 every single month in passive income, not from working, not from trading, just from owning shares in companies that keep paying him over and over again. And the craziest part? Over those 30 years, Jake personally contributes only around $78,000. Yet the portfolio itself could grow to over $800,000. That gap between what he invested and what he ends up with is where the magic happens. Because most people completely misunderstand investing. They think wealth comes from finding the perfect stock. It doesn't. The biggest fortunes are usually built through consistency and time. And honestly, that sounds boring. But boring works. Jake learned this after watching one of his coworkers constantly chase the next big thing. One month it was crypto, next month AI stocks, then options trading. Every week he was trying a new strategy. Meanwhile, Jake quietly automated $50 every Monday into Dividend investments and ignored the noise. And over time, something strange started happening. The portfolio began growing faster and faster. Not because Jake added more money, but because the investments themselves started helping grow the account. That's the power of dividend reinvestment. When you own Dividend stocks, companies regularly pay you a portion of their profits. Most people spend that cash immediately. But Jake reinvested every dollar back into buying more shares. Those new shares produced their own dividends, which bought even more shares. And eventually the portfolio started snowballing. At first, the effect felt tiny. That's why most people quit too early. Year 1 feels disappointing. Year 2 still feels slow. But somewhere around year 10, the math starts changing. The portfolio begins growing on its own momentum. Think about it like planting a tree. For years, it barely changes. Then suddenly it explodes with growth because the roots were building underground the entire time. That's exactly how long-term investing works. Now here's where it gets interesting. Jake had a college friend named Ryan. Both invested the exact same amount, $50 every week. Same investments, same timeline. But Ryan spent his dividends whenever they arrived. Extra shopping, vacations, random purchases. Jake reinvested everything. 30 years later, Ryan built a decent portfolio worth around $190,000. But Jake's portfolio crossed $800,000 and paid him over $5,000 every month in passive income. The difference wasn't intelligence. It wasn't luck. It was patience. One person consumed the cash flow early. The other allowed the machine to keep feeding itself. And this is also why consistency matters more than timing. Jake never waits for the perfect market conditions. He doesn't try to predict crashes. Every Monday, $50 gets invested automatically. Market going up, he buys. Market crashing? He still buys. Because over long periods of time, consistency beats emotion. Now, obviously, not every dividend stock is good. Jake keeps his strategy simple. He looks for companies that have paid dividends consistently for years, companies that increase those dividends over time, and businesses strong enough to survive recessions. Healthcare, infrastructure, consumer essentials. The boring industries most people ignore. That's usually where stability lives. Now let's look at what happened over time. Year 1? His portfolio reached around $2,700. Honestly, it felt unimpressive, but he stayed consistent. Year 5? Around $23,000. Year 10? Approximately $55,000. And this is where everything changed psychologically. Jake realized the portfolio was no longer growing only because of his contributions. The investments themselves were now creating meaningful growth, then compounding really accelerated. By year 20, the portfolio reached roughly $145,000. And by year 30, over $800,000. Generating more than $5,000 every single month in passive income, automatically, without selling shares, without working extra hours. all created from the simple habit of investing $50 every week. And honestly, the saddest part about investing is that most people wait too long to begin. They think they need more money, more knowledge, more confidence. But waiting is expensive, because every year delayed is another year compounding can never recover. That's the real lesson here. Financial freedom is not always about earning dramatically more money. Sometimes it's simply about consistently buying assets that quietly grow for decades. Jake didn't change his life overnight. He changed it one Monday at a time. And if this video changed the way you think about investing even slightly, subscribe because in the next video I'm going to show you exactly how beginners can start investing step by step.